welcome to everyone who's joining us from all over the world. I'm looking forward to our discussion today, and I want to just remind everybody that we're going to have a Q&A at the end. So if you have any questions throughout the discussion, just jot them down and later. But otherwise, thank you for being here. And today we're going to discuss insurance cybersecurity together with Hub Security's very own VP of Business Development, Carmi Bago. And we're joined alongside a number of insurance and security experts, including Andrew Correll, welcome, Rajeev Jain, Jacob Ingerslev, Lau, and Veysel Sinan Geylani. So thank you all for being here today. We're going to start off our webinar with a brief introduction from Carmi on insurance role in securing system infrastructures, and then our panelists will each get a chance to briefly introduce themselves. Afterwards, we'll get into a little bit of a deeper discussion on everything related to insurance security, including its challenges and solutions. So as usual, like I said, we'll leave 15 minutes at the end for a Q&A. So if you have any questions throughout, write them down. You can also shoot them in the chat if you can't find the Q&A section. And feel free to also, chat and respond to each other. The discussion aspect of our event today will be more formatted, and later on in the Q&A, we'll get a little bit more wild. So let's begin. We have an impressive lineup of panelists, and I'm excited to have them introduce themselves to you. But first, we'll begin with a few words from Carmi Bago, VP of Business Development at Hub Security, before we hand off the mic for introduction. So why don't you take it away, Carmi?
Well, thank you, Sterny. I'm very happy to be part of this group with all these wonderful experts. I think I know the least amount of ransomware insurance in the group, so at least somebody can bring up the bottom. My background, I just want to set the background, I guess, for the discussion, or what I think could be the discussion, is that, first of all, ransomware and cyber attacks are on the rise. That's like a fact. They're doubling every year or more. It's really, really amazing how much these things go up. And as a result of the attacks, the risk factor is growing, driving up premiums and the cost of insurance. And I think that's going to be one issue that we're going to talk about. And while risk management's becoming more expensive, it's actually becoming more essential. In many cases, you can't do businesses with large organizations unless you already get risk management insurance, because without it, they won't let you walk in the door. They almost think that you're going to be attacked. And so the attacks are growing, it's becoming expensive, you need to have it. And that seems like a big problem. And one of our suggested solutions is sort of like copied from the car industry. Just like technology, like the low jack helped reduce the risk on auto insurance. So risk management or ransomware needs a low jack. It needs a technology-based solution that actually can then lower the risk. And that's one of the things that Hub Security is contributing to this. So we're not coming from the insurance point of view. We're certainly not coming from the hacker point of view, but we do think that we've got a technology that can lower the risk and then get us out of this forward loop into a backwards loop where the risk is, there's less attacks, the price goes down, and then everybody can afford it. So that's my opening remark.
Thank you, Carmi. And thank you for joining us today. I have a question just before we move on to introductions for our panelists. We got a question in the chat. Is this being recorded? Yes. So if you would like to share a live link to this event right now, you can find it on Hub Security's YouTube channel. And also a recording of today's discussion will be uploaded there. So you'll be able to share it after if you'd like. So let's do introductions now. Maybe our panelists, starting with Andrew, can give us and our listeners a little bit of background on who you are and what your field of expertise is.
Awesome. Thanks, Journey. And thank you to Hub Security for hosting and my other panelists for being here with us. My name is Andrew Correll. I'm the Director of Insurance Solutions at SecurityScorecard. We are a interesting cybersecurity solution. We provide some great data around cybersecurity ratings and just kind of an attacker's viewpoint of your company's attack surface. My specific role within SecurityScorecard is to work with the cyber insurance industry, whether that's carriers that are underwriting insurance, cyber insurance brokers who are helping place this insurance, and the rest of the cyber insurance community to find ways, which I think we're going to talk about today, to partner with multiple parts of the ecosystem to make cyber insurance more resilient and more affordable for everybody involved. My background prior to joining SecurityScorecard was in the cyber insurance industry. I spent nearly 10 years underwriting cyber insurance and technology errors and omissions coverage for small and mid-sized technology companies, and also spent some time developing cyber insurance products. So, people only really let me talk about cyber insurance. So that's why I'm so happy to be here today. And again, thanks for having me.
Yeah, who knew, right? Cyber insurance. Thank you, Andrew. Thanks for joining us. Rajeev, I'll go over to you next.
Yeah, thank you, Sterny, and thank you, Andrew, for that wonderful introduction. Hi, everyone. Good morning, good afternoon, or good evening, depending on what location you are at. Let me quickly introduce my company, Gallagher, and then I'll tell a little bit about my role. So I work for Arthur J. Gallagher. This is one of the largest brokers. We are a global company, and we we serve our clients on the P&C, benefits, and risk management area. It's a 40,000 plus employees company, and I think we'll be number 3 or number 4, depending on how you look at the numbers as a global broker. One interesting fact that I just want to share, this is one of the few brokers, I think maybe the only brokers, that has won the most ethical company award 11 years in a row. So that says something about our culture and how this company functions. So that's about Gallagher. About me, my role is I'm SVP of Global Operations, Consulting, and InsurTech at Gallagher. I'm also a licensed producer in Illinois, in the state where I reside. I don't actively go and sell insurance, but I work very closely with the producers on client visits and also on our practice leads. And prior to coming to Gallagher, I actually spent 7 years at McKinsey. That's a management company, and I was a junior partner serving insurance companies and banking prior to that. So that's a little bit about myself.
Great, thank you, Rajeev. It's really, really awesome that you could be here with us today and provide this perspective. I think it's going to be super valuable to our discussion. Let's move on to Veysel.
Hi, everyone. I'm Sinan, Geylani, the founder and the CEO of the Virtual Eye Technologies. In Virtual Eye Technologies, we moved the underwriting for all P&C lines from good faith basis to data-driven basis underwriting. Before starting the Virtual Eye Technologies, I was with 18 years in the industry, working with the major companies as an executive underwriter. In my last role before leading the Virtual Eye, I was responsible about creating new insurance products for the emerging economies like autonomous vehicles, artificial intelligence, crypto, and circular economies. Simply, I love creating the solutions where the inertia of the industry stops us creating things. Therefore, in Virtual Eye now, we are heavily focusing on the cyber component because there's a huge demand coming from the demand side, from the clients and brokers side. And briefly, it's about me. I'm so excited about this opportunity to have this great panelists. I believe that will be very helpful even for me to understand what is going on, and there is a fundamental problems in this line of business. And as these great type of panelists, I believe that at least we can open nice ideas, brainstormings to really discover how can we sort out this major problem that we are facing at the moment. Thank you.
Definitely. I'm looking forward to that part of the discussion, which we'll cover in our second topic. Let's move on to Jacob. You want to go next?
Yes, thank you. And hello, everyone. Pleased to be here. Looking forward to the discussion. I represent the carrier side in this panel. So my employer is the insurance company Tokio Marine Group. I'm part of the Tokio Marine HCC division, and Tokio Marine is one of the leading cyber insurers and general P&C insurers in the world. And this is a big focus area for us. I've worked in the industry for about 20 years, and more than half of that in cyber insurance. It's still a fairly young product. So that's sort of the experience in the cyber insurance space, typically for us working there. We have innovated quite a bit in this space. So I'm happy to provide our perspective on what's happening in the insurance market and how we can continue to have a sustainable marketplace.
Awesome. Great. Thank you for being here, Jacob. And last but not least, C.
Hi, everyone. Also, thanks for having me. I am Sinan. Been working for SCOR Reinsurance based in London as an underwriter on the cyber treaty side since 2019. I've been in the industry, insurance and reinsurance industry for over 20 years. Prior to 2017, was working virtually as an actuary, trained as an actuary by profession, and happy to be looking after the underwriting side since pretty much the last 4 years, and it would be exciting 4 years given the what we have seen with the market, the kind of like disruption we have seen with the losses, and also the correction and the cycle, and also coupled with the COVID situation that we had experienced in the last 2 years. So it's very happy to be in the panel today to discuss about the market really as a whole, and the future of the market. Thanks for having me.
Yeah, thank you, C, for joining us. I think we have a really great panel assembled. So let's not waste any time. Let's jump straight into the discussion. But just before we do, I would like to just remind our attendees that if you have any questions throughout the discussion, just write them down or shoot them in the chat, and we'll get to them. I think because we have quite a large audience today, that maybe we will leave at least a half hour for Q&A. So feel free to keep any questions you have in mind and bring them up later. So we're going to just start off with our discussion, and I want to just give our audience a little bit of an idea of what today's topics will be. We're going to break up our discussion into 3 topics, which kind of go from the macro to the micro and address different challenges and solutions. The first topic is, I guess, designed for people who might be a little bit new to this topic and just want basic introduction. So we'll explore some questions around cyber insurance's market and technology. And then in our second topic, we'll move on to challenges, threats, and risks, followed by approaches and solutions. So to start off our discussion today, on our first topic, I want to ask a question for all our panelists, so feel free to jump in and respond. But maybe just give us a broad overview, an outline, or map out for us who the key participants are within the cyber insurance ecosystem. Yeah.
I'm happy to take the first one on that.
Yeah.
And cyber insurance is somewhat unique to that extent. If you look at traditional insurance lines such as auto insurance, property insurance, general liability insurance, you typically just have 4 participants. The insurance carrier, the broker or agent, who typically represents the client and tries to get the best coverage for the best price for them. And then you have the reinsurers, who the insurance carriers will split the risk with, so you don't take all the risk yourself. The cyber insurance space is a little bit different. Cyber risk is really dynamic, and it's obviously very digital. And I think that's allowed for a tremendous amount of innovation to take place in very few years, basically. So in addition to those participants I just mentioned, the ecosystem is continuing to expand. We have what we call the InsurTechs, and that can take many shapes. But these are companies that are typically involved with adding value to either the underwriting process in cyber insurance or distribution of cyber insurance, or it can be catastrophe modeling. And then we have this host of companies that aren't necessarily new, but just given general increase in cyber risk, as we heard in the beginning of the conversation in the introduction, that cyber attacks are on the rise, and that's absolutely true. So we're seeing lots of innovation in the cybersecurity solution space, and there are increasingly partnerships between cyber insurance carriers, cyber insurance brokers, and providers of cybersecurity products and services. So channel partnerships, because there's such an opportunity to add services around the insurance policy beyond just paying when you have a loss. So that's sort of my summary of what the ecosystem looks like.
And Jacob,
thanks,
to
Jacob.
kind of drill down into a concept that you introduced there, is this idea of really an ecosystem that's going from fragmented, siloed operations to one that's increasingly joining together, joining forces. So, you talked about the insurance carrier. Their primary operation is to transfer risk from a policyholder to themselves in the event of a claim. But what I'm seeing and so excited about is that the value creation is starting so much earlier in the process. It's about risk management and being a true partner, rather than saying, we'll sell you an insurance policy and call us when you have a claim. I think we're all finding that the more collaboration, more open communication, that really, really amazing outcomes start to happen. See it on the brokerage side, which Rajeev can really dive into. But yeah, overall, I think it's a unique insurance policy product in that we're starting to see so much more cohesion throughout the value process.
Great. Can anyone, maybe Jacob, talk a little bit about the market size and its potential?
Yeah, so the good news is it's a thriving insurance market when it comes to cyber insurance. It's truly the fastest growing insurance product we've seen for a while. In the US, the market grew about 75% last year, which is unprecedented. And so most estimates sort of say about $10 billion of written premium is where we were at the end of 2021. And we've continued to see a lot of growth in 2022. Some estimates say we will get to as much as 36 billion in the next 6 years, which would make it one of the leading insurance products in terms of premium volume. So why is it growing at this rate? Well, we touched on that already. There's a rise in cyber attacks, but if there's one thing we can point to, it's the ransomware portion of cyber attacks, which has caused really two things. One, a huge surge in demand for coverage, because people are getting hit by these ransomware attacks, so they realize they can't take all that risk on their own balance sheet. And for some companies, it could be detrimental. They can go out of business. It can get that bad, particularly small business. And then the other reason for the growth is also somewhat unfortunate. The insurance industry was taken a little bit off guard by this rise in cyber attacks. We were essentially pricing the risk based on data breaches for the most part, which is what was the risk of 5 years and before. And then out of the blue came this ransomware wave starting in about 2019, and it's only gotten worse each year since. There was a couple of years, 2020 and 2021, which were pretty bad for the insurance market. I would say most insurers writing this business lost money in 2020. In 2021, it improved slightly, but not a lot. So you still had about a half of the top 10 insurance carriers writing cyber in the US losing money in 2021. But that's obviously required some level of correction, which is predominantly price change. So that drives growth in itself. If premiums double, well, then the premium volume in the market doubles. And that's kind of what we've seen. We've seen price change in excess of 100%, especially in the large account segment. So we still probably need a bit of correction, but that's really what's been driving the growth so far. And it's a good thing. Ransomware is not a good thing, but we want a large, thriving insurance market for cyber insurance with good diversification, so it's sustainable.
Rajeev, you wanted to jump in on that?
Yeah, no, I think I agree. I think the panelists covered some of the major trends. I think as a broker, and I just want to share two numbers just to add to what Jacob and Andrew said. There has been 300% increase in cyber attacks, the losses that we are seeing between 2018 and 2021, and the trend is only accelerating. I think it is not improving. And if we were to look at the premium increases that Jacob mentioned, 92% premium increase in cyber policies, even the best cases where we see the loss is really, it's a very good client, we are seeing minimum 50% increase. And if you contrast that with other insurance policy rate increases, that's 13%. So we are talking about, a magnitude, order of magnitude, 7-8 times more increases in cyber compared to what's happening in the rest of the industry. I'll let you ask other questions, Sterny, but I just wanted to show the demand supply side. As a broker, we kind of sit in the middle. What are we seeing both on the demand and supply side? So I can share that view, yeah, but I'll give opportunity to other panelists to speak up.
Thanks, Rajeev. Yeah, I want to ask. Sorry, Veysel, go ahead.
Yeah, especially in the ecosystem, hackers are in the ecosystem as well. That's very important. Yeah. And literally, we are playing a kind of game theory type of Nash equilibrium case. Just whenever we are trying to do something good for making the market much more robust, and it triggers a kind of interesting new technology to be developed or methodology to hack the systems as well. And it is a little bit, I see it kind of similarity with the kidnap and ransom policies. Because if the market knows that there are much more kidnap and ransom policies, that the number of kidnapping is increasing as well. Therefore, more the hackers knows that, oh, there's a widespread in the SMB sector and they are very easy to hack, then, and very likely there is a kind of, especially insurance policy is going to be paid by them. So that's a kind of really good, interesting, tricky. Therefore, the entire ecosystem, we need to think the hackers as well. They also observe and act accordingly, whatever we do as a whole market, either provide the risk management or price change or whatever we do it. But this is so different in property risks. You can't change a turbine explosion probability with a kind of manipulation. Therefore, it is what it is and linked with the realities and the factors. But here, there is a kind of iterative reaction from the other side as well, which triggers the claims. That's a really very interesting balance that I see. And as long as we have a kind of really good strategy in place, and we need to be at least one step ahead of this. Otherwise, the business rates will keep going up. And unfortunately, I'm very much afraid that we may lose the distribution of the cyber insurance portfolio and start with the big volatile risks in underwriting books.
I just want to comment on that. I generally agree with many of those points, but I do want to dispel the cyber insurance leading to ransomware attacks myth. I can't deny that occasionally when hackers roam around in a network, they actually find the cyber insurance policy, and it's easy to think they're gonna ask for the policy limit as their demand. That does happen, but there are at least 5 or 6 other reasons that drive ransomware attacks before then. Number one, cryptocurrency. That's really what's changed, I think. Poor security is another one. Lack of government intervention is another one. Countries that allow hackers to operate freely out of their territory. So I would put cyber insurance 6th or 7th on the list, at least. I just wanted to put that in there.
Yeah, it's super important. We just have a lot of questions to cover, so I want to move on and we can get back to this, circle back to this later on, hopefully. So maybe clarify for our audience members, what does cyber insurance actually cover? Anyone can take that.
Oh, I think that could be an hour and a half long discussion, honestly. So when I think of cyber insurance, I think of this as covering perils that you're going to face in the digital nature of our world. And as we continue to evolve with technology, that's increasingly, it's just getting a wider net of what it covers. When cyber insurance was first launched, it was meant for technology providers and covering third-party liability that they faced in their operations. But as the world matured and more technology started to be adopted, literally every industry and every business is facing exposures because we all rely on the internet. For example, we're not having this talk in person, we're meeting virtually. So this is a huge cyber exposure. And so it covers things like, when you suffer a cyber attack and you're no longer able to transact business, losing data, having your systems encrypted. And those are just the digital aspects, but you start thinking about, well, what happens if I'm a manufacturer and my industrial control systems are compromised? We're starting to see cases of real physical harm caused from cyber events. So, to answer the question, I think over time it will become a cover for everything. Just a vast amount of coverage out there.
I just want to add to that, Andrew. Exactly, I think it has changed as a policy. With ransomware, it is now becoming more of a first party, more focused on the first party than it was on the, when it was originally created. In addition to financial losses, what we are also seeing is from these attacks, business interruption is happening as well. On average, I think you see 23 or 24 days a business can be down when there is an attack or a breach. So, of course, these policies were written with a different mindset, and now some of those carriers are finding whether these are covered or not. But business interruption is another big piece that I think a lot of these policies cover, but it is getting more refined. The language is becoming more and more crisper as we go around what is covered or not.
C, for you, what role exactly does reinsurance play within the cyber insurance ecosystem? We spoke about it a little, but maybe you can just expand.
Sure. As a backdrop, like what everyone else was alluding just now, we can see the prices in the cyber insurance market have risen sharply over the last 2 years, 2020 to 2021, and expected to rise further, at a slower pace, perhaps over this year and next year. But in some cases, we have already seen premiums double to the current levels, let's say, over the last 2 years. And the pandemic definitely accelerated the digital transformation and increased systemic vulnerabilities, causing economic and share losses from cyber to skyrocket. So as a reinsurer, we estimate primary insurers pass around 35 to 45% of the global cyber premium to reinsurers, and definitely more like 45% in the recent 12 months. And insurer rely on us, the reinsurer, for our expertise in managing a potential accumulation risk and the exposure to cyber risks. So there is a strong partnership here between reinsurers and primary insurers, whereby the risk transfer mechanism and the risk-sharing nature of the relationship here could only strengthen the coverage and give greater balance sheet protection against frequent and high severity losses. It could also support access actually to cyber-related services through white labeling services, for instance, and hence the growth for the cyber insurance market and the development of the cyber insurance for new and emerging markets. And white labeling services include the solution itself and, of course, the capacity. But however, there's a big but, and because equally important for the reinsurers also that we need the retro partners to come in to do the same thing as the Reinsurers Act for the primary insurers. So in order to spur a healthy and prominent growth for the cyber insurance market, we believe a more mature kind of retrocession and insurance-linked securitization market would be required in order to increase capacity and support cyber market growth, and then could only lead to better returns on capital because efficient capital management further down the reinsurance and insurance chain. Thank you, Stan.
Sure, thank you, C. I think we're getting many different perspectives here, which is super important to understanding, to getting just a really well-rounded overview, introduction to cyber insurance. Carmi, can you speak a little bit more about the benefits that companies get from using risk management insurance? Maybe you can bring some of your cyber perspective into this.
Well, okay, so let me just say that we go back to the beginning of why this is happening and why there's so much ransomware. It's A, because it's easy, and B, because it's a business. In other words, you can buy ransomware attacks on the internet, and you can execute them for money. So this is a business. It is a business designed to make money. By the way, it's one of the largest growth businesses in the world. And the growth is due to technology. Technology on two ends. One, the internet and the dark web and digital currencies have made it easy to run the business. And the fact that the current computer architecture is so prone to attack has made it really easy to attack. If you compare it to home insurance, you're now insuring a house without a door, without an alarm, without a window, and where the camera can be broken easily. The answer is need a better house. That's the answer, okay? That's at least our answer. Our answer is you're not going to kill the business. The hackers are going to be there forever. You're not going to get rid of digital currency. You're not going to dissuade them by not doing cyber insurance. Oh, they won't collect money. No, that ain't good. You just need to make it harder to attack. And so that's our position. Our position is that if technology got us in this mess, technology can get us out. And companies need risk management insurance, and they need to protect their data so that they can stay in business. That's why. Protect your data and then get risk management insurance so that in the unlikely event where you do get attacked, you can stay in business. It's a simple statement.
Right, Carmi, to your point, I mean, fire insurance has been around for 300-400 years now. We haven't tried to get rid of fire, right? The attackers aren't going anywhere. We just have to be better at becoming more resilient and in mitigating versus truly eliminating, because I mean, to truly eliminate cyber attacks, we'd have to get rid of digital technology, and we all see that the vast value. We can't do that, right? We can't do it.
No,
so
Andrew,
to your point,
so the good news is you don't need to get rid of the internet or digital technology. You need to build a better computer infrastructure.
Exactly.
And actually, and as the host of this, and as a company that again isn't in insurance but builds secure computers, we think that we have an answer that actually can help lower the risk factor completely. Yep. So if you score data stored on our stuff, you'll say, "Oh my God, this is really good." And that's our contribution is not to get rid of the fire, but to build in your analogy, to build a fireproof house. And exactly. That's what we're trying. That's what we're trying to do, and that'll reverse the cycle from rates going up and being hard to get to rates going down and being easier to get. And also, it'll actually make qualifying easier, claims easier, and the whole cycle will get easier because you'll know what's insured and what isn't and where it goes.
Veysel, a question for you is, what do you think about how affordable some of the current cyber and security and insurance solutions are to SMBs? I mean, to everyday businesses.
Especially in the earlier discussions, just we realized that the prices are going up, and definitely, and if we consider the current market conditions, pricing going up in the absolutely terrible timing for the SMBs. The guys do not have money; they are really struggling, and the pandemics didn't help them, and they didn't have the infrastructure for digital, just remote working or all other stuff. Therefore, it is a kind of becoming much more less affordable for these ones. And unfortunately, the good cybersecurity infrastructures are generally affordable by the large corporates, and small and medium businesses cannot afford, or even they do not know, even if there is a cheaper solution as well. Therefore, there is I think, and we all know that, just the SMBs are the backbone of any economy. Just I have spent my 18 years of underwriting in the large corporate segment, but everyone knows that you make money from the medium SMB segment mainly. So I think, and we see a kind of huge demand and a little bit desire to have, but cannot have that type of coverages. Earlier, it was much more easier because, as Jacob mentioned, it was a data breach type of pricing modeling, and it was so easy to get these coverages. But we are talking at the moment totally different picture.
Right, and often SMBs are more vulnerable than even bigger fish.
They are not ready. They are not educated. They are not ready. They don't have the infrastructure, and hackers are, just it is the just evolution, which means that you first attack the just most easy prey.
Lowest hanging fruit. Andrew, how is cyber risk different from other types of insurable risks?
I think one of the biggest differences in cyber is that it's evolving at such a fast pace. I mean, not to keep harping on fire, but fire burns very similar from the start, right? We understand fire in a very succinct way, but cyber risk is constantly evolving. To Carmi's point, to Rajeev's point, the threat actors that we're chasing are constantly evolving. The tools, the technology is improving, and as soon as we button up one area, they move on to another one. Ransomware. I mean, ransomware has been around for 30, 40 years now, but we haven't seen the proliferation until a very perfect storm came to be. And I also think it's unique in that there's so many exposures to cyber risk. It's not like workers' compensation insurance, which is focused solely on humans and workplace injuries. This really has a broad reaching effect on an entire enterprise. And so for those reasons, I think it's a really unique risk and one that we're all having difficulty kind of getting our arms around as we continue to grow. To Jacob's point earlier, I mean, this is maybe 40 years we've been doing cyber risk, whereas insurance has been around for 400. So I mean, it's still a relatively young thing that we're trying to understand, and I think for all those reasons, it's really unique, but also really, really exciting to be a part of in these early days as it continues to grow and evolve, and we continue to work together on long-term solutions.
If I can add to what Andrew's saying, from a carrier's perspective, cyber insurance is really counter to everything else we do. In most other lines of business, like Andrew said, they've been around for decades and decades, sometimes hundreds of years, which means we have a tremendous amount of historical data. And historical data is typically how insurance carriers price and underwrite business. You look at historic frequency and severity data, and then you set your price on that basis. With cyber, we have next to no historic data. And even when we do have some data, it can change in 3 months or 6 months or a year, as we saw, to compare to property, which is not without challenges, right? There's, we talked about fire, but generally property insurance, the biggest challenge is climate change. Which is causing, more severe weather and drought, and hurricanes are more frequent and more severe, and we have wildfires. But that's like a change over a decade or 2 decades or 3 decades. We see probably the equivalent of 10 years of climate change every year in cyber insurance, if that makes sense. So in insurance, if you don't get either your frequency or severity curve right, you're almost guaranteed to lose money. And here we tend to be at risk of getting both wrong every year. So that sums up the difference between cyber insurance and other lines of insurance to me.
I wanted to mention also just the fact that, technology for hackers has just become, it's part of the proliferation, right? The technology has become so much more accessible, so much more widely shared on the dark web. That groups have just been popping up and copying each other, making it quite easy and quite profitable. Rajeev, maybe you can talk a little bit more about this question of how the market is evolving so quickly. What are some trends that you're seeing
Yeah, no, and I think most of the trends that I think we are seeing, we already covered in this discussion, but I'll just give a picture from what we are seeing on the demand side, and a little bit of this will be a repeat for people, so I'll be brief. I think there are three trends that we see. One is, we already talked about, the attackers are getting more and more sophisticated, and they're getting more efficient. They're attacking things like, supply chain now. So rather than going after individual company, the supply chain, it gives them a broader base to attack, email providers, software developers. It just increases their access. And we think that trend is likely to continue at this point, because as we talked about, technology is becoming, technology makes it easier, although we all love technology. The second trend we are also seeing is, sorry, go ahead. Stoney, was there a question? Sorry, can you guys hear me?
Yeah, I can hear you.
Yeah, we can hear you, Rajeev.
Okay, I'll keep going so that I can. So, and I think the second piece that we are seeing, I think you already talked about, is the nature of insurance is changing. It was a third-party insurance. It is becoming more and more first-party. Ransomware is on the increase. And what is interesting, like Jacob and Andrew were talking about earlier, what differentiates cyber from other insurances, in cyber, you really don't know what is covered unless it's not explicitly covered. So it could be you have a cyber policy, but actually the damage is done to a property through cyber. Now, what is that coverage, right? It could be a big exposure to a carrier, and that is still becoming more and more clear as we go, as we get more experiences. So that makes it very complex as well. Third piece, which we actually didn't talk about, is the COVID. Carmi, you were mentioning about this earlier. I think COVID has a huge implication as well. I know IBM did a study around what is the correlation between remote working and the loss that happens from a breach. And there is a very strong correlation. More and more people that are working remotely, I think the amount of losses we see for those companies are increasing. And this, even after COVID is over, I think that trend will stay. So those are, I think, the three main trends that we are seeing. Open to your suggestions, Guy, Jacob, Andrew.
Yeah. So first of all, a small note. We've lost Sterny. Hopefully it wasn't a ransomware attack.
Hey, we won't know for sure.
That will be too topical. But so I'm going to take over the leading until the professional host gets back. Just to that was just a note for bookkeeping and all that stuff. I don't know if I can do this, but I will try my best. So I think we've covered problem. And again, with my simple view at this, it's the hackers are everywhere. We're losing all of our stuff. Wow, we got to do something about it. I know that that's not the most technical summary, but it seems to sum it up. And I'd like to thank Sinan, Veysel, for also saying, and the SMBs, if we just look at them, they're getting it the worst. They don't have the money to afford it. They don't have the IT teams. They can't afford $10,000 or $100,000 of ransomware readiness. And then after they do that, to go chase their claims. So SMBs really need a solution. And I've been harping all along that I think that together with all the esteemed insurance people on the call, we need some technology to sort of move the goalposts so that the hackers and lower their attack. So I'd like to open up by asking Veysel, what alternative ways insurers can provide affordable cybersecurity and cyber solutions to their customers, if you don't mind.
Thanks, Carmi. I'm back. Sorry about that.
Welcome back, Sterny. From my humble career and experience, I would always try to follow a pattern. How can we make the risk manageable first? Therefore, leverage whatever you have in the toolbox and make it a kind of scalable level. Therefore, then you can, with the economies of scales of the economies, then you can get a benefit of the price attractiveness for that segment. And mainly, I think nobody can alone answer this question. It's a kind of altogether, just from the reinsurer perspective, from technology providers, brokers' perspective, there must be a kind of a joint process. It's a process as well. Like NFPA standards didn't discover in a month. Therefore, it takes a process and sprinkle disciplines. These things significantly improve the performance, the probabilities, odds of having a major severity incidents. As Jacob mentioned rightfully, we need to find way either decrease the severity or frequency. Otherwise, it is not going to be an insurable risk. And if the risk exists and if it is not insurable, then insurance market is out of the picture because clients need to find something else. Therefore, we saw that in earlier US liability crisis, just in 1970s, 60s, market always finds a solution. Therefore, as an ecosystem, let's say that in the not being in the dark side or in the good side, the ecosystem must collaborate with openly because there's a huge problem, an exponential growing problem. And how can we make available some tools, affordable, scalable, and easy to understand from the SMB sides? Insurance is not their top topic. Everyone ignores that something still happens. Therefore, in SMB side, definitely it must be like a kind of very simple process. Whenever I walk through every cyber wording, they are state of the art. And I think even the underwriters, just have to struggling to exactly understand what it's being really intended to cover till the claims happens, as Rajeev mentioned. Then once the claims happens, everyone sits together with the lawyers and discuss about the wording and the claim process. So I believe that it's a kind of process, but like this type of panel, if we came together like this and trying to think about it and share with the audience, I believe that we can find always a ways that make it easy to understand, scalable, economical risk preventions, and also decrease the severity component of the incidents with working and training, educating the customers as well. It's going to be a long journey based on my other lines of experiences.
Thank you, Veysel. See, maybe you can talk a little bit more about the other challenges, threats and risks that exist or that are a top concern for reinsurers from their perspective.
Sure. As discussed earlier as well, also as published recently by one of the top reinsurers, we have this prediction of the market premium, the size to go up to like 22 billion in the USD by 2025. That also means the market penetration need to grow further in order to get there. And what it means to the potential for aggregation, as I mentioned earlier about accumulation risk. So this will be a problem because that also means the world will become more and more connected because we are dealing with cyber risk here. So the market needs to be scalable, and that also means the markets, we have to evolve on how we manage systemic risk. This is at the top of the priority for reinsurer because ultimately reinsurers sit at the top of the cyber loss aggregation chain. So with the rise of the ransomware events in the last 24 months to 36 months, that brought a significant increase in the losses to the market, which led to the market undergoing remediation, corrections of the product, and brought to the focus of how even a systemic rise in claims frequency, rather than just the increased severity, could also have a major impact to the profitability of the market, given that the losses seen today are not cat losses. They are just simply attritional losses, even though due to ransomware events. So reinsurers need to have the confidence that insurers are managing their aggregation well and also using reinsurance wisely, properly as a way of managing the exposure. And the market as a whole will definitely need to continue developing and improving the reliability and understanding of how we model the systemic risk. We have these systemic risk scenarios, or the so-called realistic scenarios, already been in many years, developed by Lloyd and recently by the PRA through their stress testing phase. And so, the insurers need to be able to demonstrate that they are comfortable with the exposure, in which, by way of having the ability in assessing and mitigating and also quantifying or even measuring as realistic as possible and as practical as possible this exposure. And only then we will be able to attract more capital. This is the challenge where we are facing at the moment, the capacity crunch. So we need to attract more capital to the cyber insurance industry so that we can grow the market and keep providing into the future the needed capacity to meet the client demand.
Thank you, C. Great overview. Rajeev, what do you think is the next horizon of cybersecurity threats? What do we have to look forward to?
I think from an insurance perspective, we see there are 4 players that will have, it's still at I think we are at a crossroads in this year. The industry will be created or defined or redefined in next 1 or 2 years, as I think people were saying earlier. There are 4 players. The insurance carriers, I think we will see the policies and the rates will continue to increase, and the restrictions on the policy underwriting discipline will continue to happen. If that doesn't happen, we'll see there is adverse selection that will take place for carriers. That will be very risky for carriers. So I think that will define the carrier part. On the reinsurance side, I agree with C. 45% of the premium actually goes to the reinsurers, and that is among the highest. If you look at on other coverages, there is not going to be more capacity that is going to come in. So there is going to be capacity constraint from an insurance perspective. And I think market might look at alternative options like, insurance linked securities. Other markets, I think, for capital might open up. So that's on the insurance problem side. And Karmi, I think, as you were saying, on the solution side, I think we see the vendors who can provide risk management from a technology perspective. They will define this market as well, because they are a very active player. If you can stop, and to Andrew's point, maybe stopping it is not, it's like fire, but even if you can create that fire resistant house in your analogy, that is going to be a big win, because it is just losses are continuing to increase, and I think that has to be stopped. And the last player, which is I think one of the most important one, is the government policies. How can government help not only for stopping or going after the bad actors, but also using the cryptocurrency or whatever the tracking they can do to get some of that ransomware money back, if it is possible. I think that will also define the industry. So I think these 4 players will define it. And as Veysel, you were saying, it cannot continue the way it is going. It'll just stop the economy. So there will be some changes that will happen in our view.
Thanks, Rajeev. Karmi, anything to add to that? And as a follow-up, maybe. Yeah, go ahead.
No, I just wanted to, first of all, I like the analogy of the fireproof house. You can't stop the fire, but you can put your stuff in another house. The analogy we used to use is if you want to keep your money safe, put it in a safe.
Yeah.
And one of the things I wanted to point out is it also can help with the claims by creating a technology that actually has a safe area within your network. It's very easy to say what's insured and what's not insured. Stuff within the safe area is insured. Stuff outside isn't insured. It's sort of like you drove your car without your seatbelt, or you don't have a license, you're not insured. So if you, and this technological delineation will help you get insurance, protect your files, keep stuff defined, and in the unlikely event where you need to make a claim, because it really will be hard to attack, you'll be able to define what was covered and what wasn't. I don't think we're going to stop the hacking. I don't think we're going to reduce the fire. And I don't think governments chasing digital currency is that much of a solution, because it's really hard to chase. So I think that we need to work together, the technology providers that we represent, and all of the wonderful, and all the people in the insurance chain, to start readjusting the insurance. As Veysel said, it will be fixed, and we just need to come up with a way that fixes it, that fits the market. I think we've lost Sterny again, which now I'm sure it's a ransomware attack.
Definitely ransomware.
Done by some hacker that just didn't like her. No, just joking. I'm sure it's the internet, but anyway. So I think we're coming to the Q&A session, okay? And so I'm going to just go through some questions that I have here in the thing, and I'm going to start reading them off initially. And if anybody wants to take them, just say, hey, I want to take this. Okay, I don't know anybody else. So Richard says, does cyber insurance cover personal injuries in healthcare settings in the event someone is physically injured? Anybody?
I can take
Jacob.
that one. Yeah. Yes and no. It depends on the individual policy. Some carriers have standard coverage for bodily injury included, but it's typically a supplement. So the typical process is the claim would first go to the medical malpractice insurance policy or general liability insurance policy. If not covered there, maybe it goes to the cyber insurance policy. But I think this is an evolving area. We haven't seen many of these claims yet, but it is definitely true that ransomware attacks against the healthcare sector is causing both loss of life and severe illness because people don't get treatment fast enough. That's been clearly established in different studies. Certain ransomware attacks going against certain hospitals, and there's an increase in deaths from stroke and heart attacks, et cetera, because people can't get treatment fast enough. So this is a true problem, and it needs to be solved. It's just coming together as an industry on, does it go on the med mal policy or does it go on the cyber insurance policy? But there is some coverage already available.
Yeah, and it goes back to this concept that we have around silent cyber, where you have traditional insurance policies that were not designed to cover cyber risk, but if they were not designed in such a way that explicitly excludes events that were calls from a cyber nature, there's possibilities that those policies would pick up coverage for it. And the problem that the insurance industry is facing is that those claims are not being priced for. Or premium is not being charged for them, but their claims are still being paid. So I think that's one area that the insurance industry continues to evolve is looking at the design of those, because cyber risk are here, they're growing, and they're popping up in places and policies that some folks didn't intend to.
Thank you very much. So you got a yes and a no answer, and we have to address it because cyber is a risk. That's great. We have another question. Can you please advise how do you quantify cyber risk? Who would like to take that? Because that's not for me. Anybody want to quantify cyber risk?
Perhaps on the reinsurance side, I mean, interestingly, we do have realistic disaster scenario, and we have a modeling tool nowadays, not as sophisticated as we want it to be, but at least there's some traction in terms of assessing, help us to give us the kind of like in the insurance term, like 1 in 200 year event. So we are able to assess what is our PML, put it that way. It's quite similar to the property cat market, put it that way. So that will give us the kind of like what would be our retention that we can absorb from the risk management perspective in order to set a boundary as to what kind of capacity we can provide. And it's very important because ultimately, based on the limits that we are deploying and also the scenarios we are assessing, we should be able to calculate an estimate based on certain probabilities and also assumptions, the kind of maximum loss scenario for us in order to ascertain what kind of capacity we are able to retain ultimately in order to deploy to the markets.
I can provide the attritional loss perspective on that. So I guess the question for a lot of companies out there considering buying cyber insurance or currently buying cyber insurance, what will a loss look like for my company, and what's the probability of that loss? I think the probability, there's still a lot of work to do, and that has to do with what I said earlier. The risk keeps changing. It's very dynamic. So I don't pay a lot of attention to frequency when it comes to sort of quantifying loss, because I think it's really challenging. So you have to account for that in your pricing, obviously. But what does the loss look like for a given company? The more losses we get and sort of store that data and analyze that data, the better able we are to say, you are this industry and you have this revenue. This is roughly the size of loss you're going to have. If it's a ransomware attack, if it's business email compromise, fraud, if it's data breach, probably the most accurate assessment we can give in the data breach space, because data breach has been around for quite a while, and we have enough losses now. We can say, if this is the number of records you lost to a hacker or or otherwise. And it's it healthcare information? Is it payment card information? Is it social security numbers? We can get pretty close, I would say, within 80% accuracy to what that loss is going to cost. Ransomware is still a little bit challenging. Business email compromise, the FBI actually collects most of the incidents and publish them in the IC3 report every year. So we know sort of roughly what happens from year to year, and it's about 20,000 incidents a year in the US. So we are getting better, but there's work to do. I think the catastrophe modeling, there's also work to do. We have all our individual views, and then we have a handful of modeling firms out there who frankly are all over the place. So I think we want to get to a common viewpoint such that the reinsurers are comfortable with us as insurers when we grow our portfolios.
Great. Carmi, should I let you continue with some Q&A, or should we jump back into our discussion?
It's fine. You have some questions. I like this tit and tat thing, or over to you, and stuff, whatever. We should be.
Yeah, it's great. I'll let you take over for Q&A at the end. Let's just, I wanted to get through a few more questions before we get to it, but I don't want to stop anyone. We're having a really fascinating discussion. Jacob, I wanted to get your take. Just maybe explain to us a little bit, what technology is actually used in the underwriting process, and what the underwriting process looks like from your perspective.
Yeah, so it all depends on which insurance carrier you're asking, or InsurTech MGA. So the good thing I can say about InsurTech MGAs is that they've pushed all of us to be more innovative and use more technology in transactions and underwriting. So for us as a company, we use two fundamental technologies when it comes to the underwriting. Obviously, there's still something called an application form, which has improved a lot during this market where prices have gone up and it's harder to get insurance. People are more willing to tell us what the security looks like. So those application forms are still used. But then we're becoming better at sort of capturing data and signals, so we don't have to ask the potential policyholder for them. So non-intrusive scanning is one half of that equation, and we look for a mix of network exposures like remote access technology that might be vulnerable to attacks. So we know remote desktop protocol is a very commonly attacked type of protocol when it comes to ransomware. Remote code execution vulnerabilities. So that's not a fixed bucket. That's sort of an ever-evolving bucket of whatever is the on the priority list for the threat actors, what is most critical and least patched. So we have to continuously see sort of, we maintain a bucket of about 30 or 40, but it's ever changing. As they get patched, new ones are discovered and new ones are exploited. So that's our challenge, is keeping up to speed with what the threat actors are currently using relative to initial attack vectors. And then on the other half of the equation is dark web monitoring. So we look for stolen admin credentials belonging to our insureds. That's a good indicator of whether an attack is imminent. Even going as far as initial access for sale on the dark web. Again, those are usually disguised. This company, this industry, this many employees, this much revenue, but we can sort of get at it. And there are certain companies that specialize in actually acquiring that access from the threat actors or initial access brokers, and then you can correlate that to your portfolio. So that's the technology we've adopted, and then just sort of general distribution and procurement of insurance. Lots and lots of businesses making its way onto platforms, and that's especially true for cyber as well. It lends itself, better than most other lines of business to platform procurement. So that's how we look at technology use.
Oh, that's really interesting. Andrew, why don't you tell us how businesses can better understand their own cyber risk and prepare for a process of cyber insurance underwriting?
Yeah, I think a lot of it has to do with what Jacob just described. So we're seeing more and more adoption from underwriting organizations using this attack surface intelligence technology to look at this information, basically see what an attacker might see if they turn their eyes to a particular organization, and getting that information into their hands as well. I think having more businesses aware and in tuned and just monitoring what it looks like from the outside is going to, help mitigate risk on a much more manageable timeline, and then also make the underwriting process more efficient. Jacob can probably attest to this. An underwriter that's providing 5, 10, 15 subjectivities on a cyber quote, it makes it difficult for everybody. And so if essentially you can provide that information ahead of time, maybe with a 6-7 month runway, we're going to see more adoption and more hardening of those types of cyber postures. And then also kind of taking it a bit further, looking at the real supply chain aggregation risk. So if we're underwriting a particular company, it also might make sense to underwrite the companies that they do business with. Going back to a very famous, well talked about breach in the last couple of years with SolarWinds. When you looked at the root cause analysis, it was actually one of their vendors that was the initial attack vector. And so, understanding what that supply chain risk looks like and how to address it is going to make everyone's lives a little more easier. I think that could help reduce some severity if you can mitigate those issues before an attack happens. So that's where I really see this kind of next phase of going into just more collaboration across the ecosystem, rather than just having it be a single point in time assessment. Kind of constant monitoring. I think that's where we really go next.
Right. And touching on that point of preventative services or preventative strategies, Carmi, what do you think are some ways insurers can provide customers with solutions, cyber solutions, which can help prevent them from attacks?
So first of all, I'd like to thank the speakers before me who actually spoke about the problems. One was stolen admin privileges, which not only attack which just let you in, almost through any security. The other was source supply chain attacks. Thank you both for that. And the answer is you can't. Risk assessment in time is actually a problem because when you get it, technology doesn't stop, the hackers don't stop, and by the time you turn around, it went out the door. It's not like when you're giving health insurance to somebody you checked in their 20s and then there's a progression as they get older to figure out the risk. Cyber just doesn't work that way. And again, I'm going to say that the way to do it is to find new technology, new computer systems that can protect you even when your admin passwords have been stolen. New technology that will stop files from going out the door, even if your computer's been compromised by a source attack. These things are not science fiction, they exist. And these are examples of some of the things that we do. And again, it's because we realize that the attacks aren't going away, they're only becoming more sophisticated. And I think it's been really illustrated by this discussion. Stolen admin privileges, there's one story I'm going to talk about, just relates to ransomware, and that's that when Target got hacked, they lost 500,000 usernames and passwords, which is not great and not good for Target. The sad thing is that about 25,000 financial institutions got hacked afterwards because the human beings who are operators at the banks actually buy their underwear using the same username password. And that's just because computer systems are operated by humans. And we're not going to take them out of the loop either. So we really need to find technology that can help do this. And that's what you can do. Insurers can insist on better technology. And by insisting on better technology, then they will get less risk. The rest of the stuff, I don't see it working.
Army, to your point, I think the insurance industry has a really huge opportunity to enact change. You mentioned it earlier. Companies can't do business. Most companies are requiring cyber insurance to do business. So there's a huge incentive. If you can't get insurance, you can't do business. And so insurance has this capability to, work either independently or with government organizations to almost kind of enact legislation that says these are the minimum benchmarks that if you're going to get insurance, that you need to do business. Now that's a more interesting conversation than, hope and see, and, maybe these things will fix themselves.
Andrew, using technology, I just want to bring another use case, which happened a while ago. There's a company in Israel called Mobileye, which their technology helped reduce premiums on car insurance because it detected when people change lanes. And that was good for the technology provider and good for the insurance companies. And so we think that the same type of partnership needs to happen now between companies, and then we can get out of here. So thank you for reinforcing the point for that discussion.
The importance of insurance in reducing price points, or technology in reducing price point for insurance underwriters. I have a lot of questions coming in from Q&A, and I really kind of want to jump right into them. Is that okay for you guys? We wrapped up our final topic, and now, okay. So I just have a few here, so I'm just going to shoot them out as they came in, as I received them. Let's start off with a question from Richard. Richard asked, are insurers comfortable with a co-op model for security for SMBs and small hospitals, or is this not the case?
I can take that one, being the carrier here. Are we comfortable with the cloud model was the question, right?
It says with a co-op model.
Co-op model. So I think we have to have more detail about what that relates to. Co-location, or what's meant with co-op in this case?
Yeah, probably Richard can clarify for us in the chat. Yeah, co-op is a shared security service.
Shared security service. Yeah, I mean, at a high level, we have to be comfortable with any sharing because that's today's world, right? More data and applications are in a shared environment versus on-premise these days, right? There's different cloud models, private cloud, and co-location, rack space, et cetera. But we see that they all have risks. So we have to be comfortable as insurers, regardless of what industry is using that type of technology. But it goes back to what was mentioned earlier. Vendor risk is a significant risk, and it's probably the hardest one to underwrite for us cyber insurers. We get increasingly good information about our insured's direct network through application forms and through the non-intrusive scanning we do and dark web monitoring, et cetera. But it becomes quite complicated when you have vendors. If you're a mid-sized company or a large company, you can have hundreds or thousands of vendors, from cloud service providers to lots of other service providers. And as we've become better at sort of preventing the direct attacks on-premise technology, as it was rightly said, threat actors are sort of refocusing their efforts to the supply chain. And I don't think there's a particular sort of solution that fits everything, right? You have to identify the service providers. That's one challenge. There's technology that can help you do that, but it's not perfect. You can ask your prospective policyholder, who are all your critical vendors, and then you get a list, but you may not, the reality is underwriting is a 15 to 30 minute process per customer on average. Sometimes it's done fully by a machine. So you only have so much time or so much ability to seek detail for your underwriting information. But I think the industry overall is recognizing this issue, is working toward a solution. At the end of the day, we all have a common goal whether we're carriers, reinsurers, or brokers or policyholders, we want to reduce attacks. So it's just figuring out the right level of collaboration. But again, with the innovation that's happened in the last 2 years, in terms of sort of figuring out the direct attack surface for a particular customer, I think we will sort out the vendor attack surface at some point too. We'll create databases that have all these commonly used vendors and have up-to-date information on them. And then I wanted to just respond to something that Carmi mentioned, which is that the health insurance check. It's really good comparison, right? You can add your information and do certain health checks, and maybe that'll give you a discount on your health insurance. But it's not a very frequently occurring situation. In cyber, it's not enough to scan and look at certain data points at the time you offer the insurance. You have to do it throughout the policy cycle. Vulnerabilities do not just happen at the time of quoting or binding coverage. It happens at any point. No network is static, and no technology remains non-vulnerable, right? So that's how we try to get at it. We actually monitor our customers' networks throughout the policy period. We alert them if they have select vulnerabilities that we monitor for, and most of them respond to it and they appreciate it. So I think that common goal is better and better understood and recognized.
Yep.
Thanks, Jake.
And I think that's where the evolution needs to continue to happen. Is that, to your point, you're spot on. I mean, this is the most fluid risk that we're facing today. It's not a point in time. There's 364 other days a year, and that's when this stuff happens. And by the time you're underwriting it at the next policy's renewal, it's too late, or that information that you got is old. They've changed vendors. I mean, there's a lot of velocity there. One thing that I've had conversations about, and I have not cracked the code, so if anyone can help, that'd be great. The incentives for this, this almost cyber telematics. How do you move away from the adverse selection? The people who want to share the information with you, they're probably going to be really, really strong posture, and those that don't, maybe not the greatest risk. So wider adoption of that kind of telematics, the telemetry of the cyber environment, and how to do it safely. Almost turning over the blueprints to your fortress is problematic, and I understand it. But yeah, how do we properly incentivize and build trust around that? Because I think the more that we know about what happens behind the firewall is only going to be good things for insurance carriers, for customers, for providers, for everybody. So I think that's one of our biggest problems that we're facing.
Thanks, Andrew. Another question we have here. Do increases in premiums drive an increase in cyber ransom, amounts?
I'm guessing that one's probably for me. So let me just understand. Do increases in premiums lead to increases in ransomware attacks? Is that, or ransom demands?
Yeah, exactly. In attacks and in demands in the amount.
Yeah, I'm going to say no. The premium increases are just basically because we didn't price the risk right when the ransomware wave happened, and now we're still adjusting. I would say what's helping reduce ransomware is actually insurance carriers asking for better security requirements when companies want to qualify for cyber insurance, and offering other preventative services like the risk monitoring, vulnerability monitoring, and also collecting a lot of information through our losses to help customers better understand what is their risk and what's the what does it look like when it happens, and how what are the attack vectors, such that you can in many cases it's like a handful of things only that's required to prevent an attack. Most of these attacks are not incredibly sophisticated. They just happen because it's easy. So you want to make yourself less attractive than your neighbor, if you will, going back to the house analogy. But no, premium increases don't have any correlation to increase in ransomware attacks or the extortion demands. I think you can say there's a correlation between size of company and certain industries and ransomware attacks or extortion demands. Hackers look at balance sheets. They're pretty intelligent to that extent. They do look at what's the ability of this particular victim to pay up a huge demand based on their earnings. And also, how many servers did we encrypt? That's how they also think about it. So what's the leverage? Did we steal data? Did we do double extortion? So we have multiple levers to pull when, for example, a company recovers from a backup. Then, well, I'm going to leak your data now if you don't pay up. I don't care if you backed up and recovered from that. I'm going to leak your data if you don't pay up. So those are some of the factors that play into the size of a ransom demand, and also probably the risk of an attack to begin with.
So maybe to add to that, actually, as a reinsurer, our observation, some insurers are actually, they intend to further reduce the payout limits, especially where contracts including the ransomware or business interruption components, and also their increase in the self-retention levels as well. This is what we have seen in the market.
Yeah, I was actually going to say the same thing, that it's rather the higher deductible, it discourages the attacks, because now it is encouraging people to be safer and avoid some of the obvious behaviors that can be avoided.
Thanks, Rajeev. What impact do you anticipate if the US continues to explore Fedcoin in lieu of traditional dollars? I'm guessing they're referring to this as a stable coin, correct?
So I think we discussed that before, Sterny. I don't think that while the cyber method allows easier ways of collecting money, it doesn't really incentivize. The hackers will find a way to get paid. I don't really think that changing the money is going to affect it in any way. They're going to find something, so I don't think it'll. What causes the attacks to rise is the ease of attack and the lack of protection. The collection, they'll work it out. I don't think that has any effect on growth or shrinking the market.
Yeah, I think there are some people that were asking about, like, Bitcoin, the value of Bitcoin is declining. This is going to be good for cyber attacks, right? No, they're just asking for more Bitcoin, the actual, the nominal figure, it's still a great currency to transact in. And I think to your point, Carmi, they're going to find a way.
Cryptocurrency is already here. So it's, having more cryptocurrency probably is not proportionally going to make the cyber threat environment and the demands higher or change the risk fundamentally. I think if you can do something the opposite way, it might have a positive impact. But I'm not incredibly hopeful. Shutting down an exchange in Russia, for example, may have a temporary impact, but it just redirects the cryptocurrency flows somewhere else. So, unless you get all countries on board, it's going to be temporary relief only.
Yeah, I think that the stablecoins do have safer protections built into them than a traditional, cryptocurrency like Bitcoin. That just by the fact that they're backed by the Fed. But let's move on. Jerry says, "Amazing guys, a lot has been said about cyber attacks, risk management, and C also mentioned about boundary. Can any of you give us or maybe shed a little bit of light on CIS benchmarks?"
CIS being the framework, I assume, in this case.
Yes.
Yeah. So from a carrier's perspective, we do look to all the different sort of predominant cybersecurity frameworks. But as I mentioned earlier, the underwriting process, we don't have all the time in the world to look at each customer. And if we did, we would have them fill out true cybersecurity questionnaires. So I would say our application forms are a modified version where we focus on those particular controls that we know work. And then the rest becomes a little bit of a gamble, but we have to focus our limited time on what we know works. And so, yeah, it's a balance, right? But we do look at the frameworks to see, what's generally happening in terms of evolution. But you would have to, look at the very largest customers for that sort of framework to be fully adopted in an underwriting process.
And I don't think, certainly if you're talking about SMBs, they just can't address it. And the problem with the checks, again, even if you check, you can't check 24 hours a day, 7 days a week. So you can check periodically, and humans work at all the time, so, and there's so many ways to circumvent firewalls and all that issue that really, you should have all the network protection in, and then you got to do more, because the current protection architectures just are not enough. In the war between hackers and technology, the balance of power now, without a change, without new technology or new armor for the businesses, they're losing. They're just losing.
My next question here, also from Richard, is full of questions.
And Richard's the question guy. He's Mr. Question.
Question guy for this event. Yeah, thanks for Richard for showing up. And feel free to send us questions for anyone else who would like to be included. Actually, our event was scheduled to go an hour and a half, but yeah, because we have so many questions and very high engagement, we're going to continue, try to continue for at least another half hour, but some of us might need to drop. So Richard asked, go back to Richard's question, has the insurance industry asked major offenders, and I'm guessing they mean by major offenders companies who have maybe repetitive record of leaks, how they intend to improve security, and do these vendors have any liability?
So to answer the question about do these vendors have liability, it's a tricky question. So the first thing that I would do as an underwriter is say, look at your contract. What did you agree to with that vendor? And I mean, for the larger cloud service providers, I mean, they're very good at protecting their liability through contractual language. So it's very, very hard to, seek restitution or go after them for these things, because essentially their contracts say the internet's a dangerous place. We can't protect you and use this at your own risk. That said, I think they do, as good of a job as possible to make this secure. But at the end of the day, you can't necessarily secure everything, but I think I still see improvements on their end. But as far as liability, going after them, good luck.
I think we have panelists who need to jump off. So I'm just going to say thank you to Z and to Rajeev for joining. Thank you for all your insights, and thank you for sharing your perspective today.
Thank you, everyone. Great conversation.
Thank you, guys. Bye.
Thanks, everybody.
But the conversation will keep going. So whoever would like to remain, we still have a number of panelists here. So don't X out just yet. I also have to jump off, but we're going to go through a number. We have a number of Q&A left. So yeah, Carmi's going to take over, and it's been a pleasure. Hopefully you will all be receiving an email in the coming days with the contact information for all of our panelists. So if you'd like, you can reach out and write directly to them, ask all the questions you didn't get to ask, and it will also include a link to the recording of our session today. So if you'd like to share it, feel free to. Yeah, go ahead, Carmi, and thank you guys again for joining.
Thanks, Sterny.
Okay, well, thank you, Sterny, for your leadership and guidance. And guys, we're now in overtime. We're getting paid double, which I don't think changes much, but that's a little bit of a story here. So let me go through more things. Do you think cyber will become a business line on its own for the next few years? I think it is a business line, isn't it?
Yeah, if that's an insurance carrier question, I would say it definitely already is its own line. Different carriers structure their organizations differently, but we're certainly seeing some of the leading carriers putting this into its own profit center, which makes sense because it's so different to any other insurance. But for those who don't house it in its own profit center, it's typically part of a financial lines division. But I do think the majority of leading carriers look at it as its own line, and that'll continue to evolve for sure.
Yeah, just to comment from my point of view about a line, I'm sure it's a line at the insurance carrier. As a technology vendor, we have our own line of products to address ransomware because it's a big business, and where people want to get protection. So we like that stuff. Okay, I'm going through more of these questions here. Will the recording be available? Yes. Critical access for hospitals, I answered. We talked about the cyber insurance for things. Our insurance looking for a better security. Our insurers looking for better security using premiums for cyber protection. I think we answered that as well. And I think we covered most of the questions. Let me look a little bit online. I don't see anything else. I think we're done with the Q&A, at least the stuff we've done. So really, guys, thanks for staying online. The last of the Mohicans. There are still 52 people online, which is really good for this. I can tell you, I've been in these video conferences where we didn't have 52 at the front. Can we chat about this? And LinkedIn is actually a question that came in. So Hub Security, as the hosts, will contact everybody online by email, and you can email questions to Hub Security. And if they are for panelists, we will route them to the specific panelists. We don't let the panelists get away. We like working with them, and we will constantly bug them with questions from now until eternity. Now, we'll probably let them drop off, but we really do appreciate your participation in this event, both to everybody listening in, and I want to thank all the panelists. It's been a pleasure to be with you guys. I learned a lot, and I hope everybody else learned a lot too. Thank you all, and good night.
Thank you.
Thanks, everybody.
Thank you very much.